Good morning, everyone. Welcome to today's podcast for commodities and currencies. We will be discussing about what the key events that happened yesterday, as well as today's key triggers. So let's start. Starting with gold first. What we have seen that gold prices traded slightly volatile, where it rose to around $4150 per ounce levels in the spot markets, but it trimmed gains after the release of the minutes of the Federal Reserve latest policy meeting, while the market participant focused on the upcoming economic data due today, and that is the non-farm payrolls for the September month. Spot gold had been trading around below $4,400 per ounce levels today, after it climbed over 1% yesterday. The FMC minutes showed that there is a divided Fed cut interest rate expectations for the December, even as policymakers have cautioned that the lower borrowing cost could undermine the flight to quell inflation that has been above the US Central Bank's 2% target for more than 4 years now. Talking about the outlook, that all eyes are expected to remain on the delayed September jobs report that is due today. It could provide insights on the health of the US labor markets, and the FOMC minutes which have been released yesterday have also indicated that there is no unity among the Fed members for rate cut. That could keep that overall the dollar on the positive side, and that could also keep the upside limited for the gold prices in today's session. Meanwhile, we could also see prices remaining cautious ahead of the data release, that is the non-farm payrolls, which is due later in the evening today, where downside also is expected to remain limited, as labor market data might show that there are concerns of overall slowing labor market conditions. MCX gold, which has closed around 1,23,051 levels on the December futures contract yesterday. The supports persisted around 1,22,424 per ounce levels, and the next support persisted around 1,21,908 levels. On the higher side, we see resistance at around 1,24,090 levels, and the next resistance is coming at 1,24,600 levels on the MCX futures contract. For silver, it has given a close at around 1,55,101 levels yesterday, and the supports for today is coming at around 1,52,500, and the next support is coming at around 1,49,500 for 1 to 2 days perspective. And on the higher side, we see resistance at around 1,56,700 and 1,59,500. So this is about the precious metals. Now, if I talk about the base metals, we have seen copper hitting a high of $10,823 per ton in early hours, and before it eased to 10,750 levels today, while it finally settled at around 10,800 levels yesterday. The close yesterday was near the day's highs, which signaled that there is continuous speculative support for the metal, despite there is weakening physical demand indicators in the near term. Macro signals remain mixed, where reports are surfaced of a US-Russia peace deal, while lack of European and Ukrainian input have triggered a pushback. Meanwhile, the sudden cancellations of the US non-farm payrolls and postponement of the November NFP to December 16 have left the upcoming Fed meeting without fresh labor data, injecting uncertainty and trimming the rate cut bets. Overall, for the outlook, we see copper holding steady near the 10,600, 10,900 range, despite weak Chinese demand and rising inventories, and also a stronger dollar. Bears are also staying cautious with small short positions, so any dips may stay limited unless we see a global market risk of sentiments. Aluminium and zinc are also struggling about $2,800 and $3,000 per ton levels respectively, while zinc looks the weakest among all the base metals, with a higher chance of sharper drop if support levels are broken. Now for copper, we see that yesterday's close was around 1,002 rupees per kg levels in the November futures contract, with the supports around 997 and 995 on an intraday basis, and resistance is expected at around 1006 and 1010 levels on the higher side on an intraday basis. Now let's talk about the energy markets. Oil prices have fallen sharply yesterday, with Brent sliding to 63.51 and WTI crude oil have plummeted to $59.44 per barrel levels, as there are reports that have suggested that the US is pushing Ukraine to accept a peace proposal, while that could also end the war with Russia. The potential for a ceasefire have raised the prospects of higher Russian oil flows, and that could return to the market, adding to already mounting oversupply worries in the oil markets. If sanctioned Russian crude ultimately reaches the market, that prices could drift to the lower $50 range, especially as geopolitical risk premium have also been shrinked. Now for crude oil, if we see the close yesterday at NCX futures was around 5 to 58 rupees per barrel levels. Now supports comes at around 5180 rupees per barrel levels. A breach of that support could see the crude oil prices sliding further towards 5100 rupees per barrel levels. On the higher side, we see resistance at 5345 and 53886 rupees per barrel levels on an intraday basis. For natural gas, we have seen a close of 403 rupees per MMBTU yesterday. The supports is at 390 and 385, while the resistance persists at 407 and 412 levels on the intraday basis. As I have discussed, that oil is expected to stay range bound today, while larger than expected US crude draw could provide support on the lower side, but peace plan headlines and product builds could cap momentum on the higher side. The resistance for WTI oil is at $61.20 per barrels and support is at $59.1 per barrel. We need to keep a close watch on the developments over sanctions enforced ahead of the November 21 deadline and geopolitical signals for direction. For currency markets, we have seen India's trade deficit surging to a record high in October. This is driven by soaring imports as well as fall in the exports from the US. While this concerns from the US tariffs, and that is weighing on the sentiments for rupee along with the rise in the dollar index we have seen yesterday, which is supporting the weakness in the rupee. Meanwhile, RBI intervention is also very active, and that could continue to keep the rupee below the 88.80 levels, and that is expected to remain very difficult to breach in the near term. On the policy front, despite inflation hitting a record low, markets have fully discounted any rate cut possibilities in this December, while the core inflation remains elevated and traders now await November's HSBC PMI figures for this week for further cues on the local currency markets. On the data front, we have seen that today we have the most important non-farm payrolls data that is scheduled at around 7 p.m. where the expectations are for a rise of 51K for the September month as against previous August figures of 22K. However, overall payrolls data is expected to show a slowdown in the labor market conditions, while unemployment rate due is also expected to show the levels at around 4.3% and the previous levels are also around 4.3. So these are the crucial data which is expected to create some volatility in the late trade today. So thank you very much, and we wish you have gone through these updates and we wish you a very successful trading day ahead. Thank you.